Hey traders, welcome to Charts and Coffee. Glad to have you here. Always good to prepare for the market before the bell. Caffeinate and dominate, right? All right, gang, let's get to it. We're going to kick off the conversation with the economic calendar here today. And the reason being is if we scroll on down to Wednesday, we don't have a lot of data that is of the red hot variety, but the hot zones that we do have, core durable goods, pending home sales. I want to remind everybody that on Monday we saw a pretty significant. Was it Monday? No, sorry, Tuesday. We saw a pretty sizable reaction to that new home sales number. I'm not going to presume the pending home sales will be necessarily quite as volatile, but let's keep in mind that at the end of the clearing range, we're going to have a 10 a.m., right? We have a 10 a.m. hot zone coming. Is my cat? I think my cat wants in the office. All right, we'll deal with that. Okay, so we also have crude oil inventories coming up 10:30 for those of you that are looking at crude oil. Oil's been moving. Grandpa Buffett got oil moving and grooving with the OXY. Please keep in mind that, yes, you could see sort of a knock-on effect from that OXY, but remember that XLE is still in chop. Look at Exxon, look at Chevron. Yep, that is the cat. Hang on, gang. I know, if you all are cat owners, you know, nothing. All right, come on, dude. Right in the middle of the show? Really? Right in the middle of the show. You know, if you have a cat, this is the way that it goes. All right, so let's see. Can you all see said cat? There he is. Yeah, make an appearance, make a cameo, dude. There we go. Anyway, so then when we have crude oil inventories, of course, the CL is going to be in play. XLE, OIH, XOP will all be in play as well. So we've got a lot going on in this calendar, but remember, gang, we can measure it in a very easy way, and that is, let's take a look at the December. There you go. And February, very interesting. What continues to happen? Why is the market heavy? It's not in a downtrend. We're not in bearish territory. We're not in this panic-driven market. We're in a market that I have to say is quite, in an organized way, adapting to the possibility, not the probability, the possibility that we get one more rate hike in February 2023. We're definitely going to get the rate hike in December. We're definitely going to be sitting at 350 to 375 at minimum come the end of this year. However, when you take a look at February, this is where the biggest adjustments are being made. This is where we're seeing, okay, if there's a chance we get one more rate hike out of the Federal Reserve, it'll be early next year. This is how we can measure it. This December, February conversation is exactly the one that we're going to have right before Powell speaks on Friday, and definitely right after. What kind of movement are we seeing? All right, with all that being said, the stage is set. So let's go ahead and take a look at, well, what you all have on your minds. What's going on this morning? That one of those pressing questions. All right. Having a cup of Café du Monde this morning. Nice. What's in the mug today? Oh, gosh. What's in the mug today? Oh, this is the Superhuman or something. This is actually an Austin roast that the Trish boss found in on one of the trips to the mothership. And that's what I'm having today. Yeah, I think it's called Superhuman or Super something. So we're giving that a whirl. All right, that's what's in the mug today. And some ketones. Delta G ketones. All right, Netflix. All right, let's take a look at Netflix. So if we take a look at the daily time frame on Netflix, Off-Road Bear, take a peek here. Let me minimize this stuff in the background, out of the way. There we go. I like seeing my Matrix background there. So if we kind of get everything else out of the way and we take a look at what's been going on in Netflix this year, you'll notice that, we're going to be moving up a little bit, and Netflix actually has moved up into a trend. So we have the 200 overhead, which is not going to be a small bit of resistance, but we do have an uptrend. We are at this point surfing the wave, and yeah, Netflix is very slowly trying to gain some traction. So could you start to buy dips long? Yes. Just keep in mind two things. We have the VWAP sitting at about 268.5. You have the 200 sitting at 321. But what's really interesting? We don't have a lot of volume. We really don't have a lot of volume sitting between where we are now and about 380, 383. So kind of interesting. But yes, on the buy the dip, you got it. All right. Let's see. Off-Road Bear said, smash the like button and hello to the, yeah, he is a very handsome boy, the cat, but I think everyone thinks their cats are super handsome. Where did he go? But yeah, he is the king. He is the king. Cats, charts, and coffee. Yeah, isn't that the truth, Al? All right, so next up, natural gas. Sure. In yesterday's video, I talked about natty gas actually being the corner of energy as opposed to crude or oil stocks. A lot of the stocks that are moving right now are stocks that are also weighted within the FCG. We'll take a look at that as well. So natty gas touched $10. It's in an uptrend, or it's, further along an uptrend than say crude oil. Crude oil is not in an uptrend at all. RBOB gas, not in an uptrend. Natural gas it's in what I call the funky part of its seasonal move. Most of the pre-winter seasonal move that we see in natty, that happened in the preceding 3 months. The next month or two gets a little choppy, but it's still overall bullish. So we're not fighting the seasonal uptrend. And if we find the EIA and those heating degree days kick up a notch, if we expect a slightly more harsh winter, that will kick natural gas up as well. Slightly more hotter summers also help natty gas. It's in an uptrend, though. Whether or not you're following those sort of seasonals and fundamentals doesn't matter as much as what's the structure. And buy the dip is valid. Now, I'm going to mention FCG. FCG is the natural gas ETF of stock. It's not the way gold and GC and GLD are, where you have GC futures and GLD is the ETF of the commodity. FCG is the ETF of natural gas stocks. UNG is the ETF of natural gas. So FCG, if you take a look at the stocks heavily weighted within the FCG, you're going to find that's where there's a lot of strength right now. If you take a look at, for example, let me give you, I'm going to make sure I got the list in order and correct. So what do we have here? Let's take a look at one of my other screens. And what you have is things like, let's see, EOGs in here, Devon, ConocoPhillips, Occidental, Fang, Hess, Chesapeake, right? These are the stocks within this FCG. So what seems to be in many ways is construed as an oil stock play, meaning crude, could actually be a natural gas play. Keep an eye on that. Not enough being discussed when it comes to natural gas. Thank you for the question, Siba. Love it. All right. Do I feel short interest has any bearing on setups? Lee, I know some folks like to look at short interest. I mean, it's data we have, so why not? However, it's not about timing, right, Lee? So I think it's the difference between it's raining out now, right, versus or hearing the thunder or seeing the lightning. I'm going to break into Imagine Dragons now. The idea is short interest is more as if we have a forecast. There's a 70% chance of rain as opposed to it actually raining. And so I look at short interest as the way in which I would get a weather forecast. It could rain, right? It could be sunny. And then if there's a trigger in the direction of that forecast, terrific. But it has very little timing element because we could have short interest sitting at a certain level, high or low, for an extended period of time. So it's more about the environment that could be ripe for sort of a, as they call it, a face ripper, a rip higher, a rally. So I don't think it has bearing on timing, but it does have bearing on the potential environment that that move could happen within. Does that make sense? Right. So I look at a lot of market internals that way. I look at the put call ratio in the same way. It's not that it's going to give me timing, but it's going to give me the environment to have certain expectations. So thanks for the question. Hey there, JR. Is the Fed Watch chart purely a math product? I know you don't like predicting Fed moves. I don't like predicting anything, right? As I like to say, I have no idea what I'm going to have for dinner on Friday. Forget where the markets are going to be in November or something, right? Or even in September. So we counterpunch, right? That's the way my process around trading is. Trade what I see, react to what I see, and block and parry as needed. Okay. But with the US dollar as the world reserve currency, this is true. The Fed has to manage worldwide inflation to a minor extent. Here's the thing, JR, if we were having dinner, and this is something that we might enjoy over, talking about over dinner, absolutely. But where's the trade? Where's the timing? Where's the level? So all that might be kind of like short interest or a put call ratio, where there's an environment, there's a tendency, there's a possibility that's sitting in the backdrop, but then what's in the foreground? Volume, volatility, time, price. So I would say that's a second or third layer conversation. And then if we can build a setup that's in agreement with that. So, the bottom line is the question, I think, is, does the Fed have to manage worldwide inflation? Okay, so then what would that map to, right? What would then you think that maps to? Stronger dollar or weaker dollar? So once you have a narrative around that hypothesis, now look for the chart to agree with it. That's always going to be my take on that. So it's not a matter of whether or not it's useful or not. It's just a matter of whether or not it's being reacted to. Does that make sense? So that's the way I'll process any of these things, where I have an idea, I have a hypothesis, and then, I want to take a look at, that process. All right, next up, Dustin asks, many at Simpler talk about the squeeze. Yeah, it's probably our most popular indicator here. It's John's indicator. After a few months of watching my videos, I haven't heard you mention it. I don't use it. Yeah, and gang, so I don't think John has grab candles on his chart. So remember, John's John, Raghee's Raghee, and everyone is each, so it's not a matter of whether or not I want to put it on my chart. It's a matter of whether I need to know if we're going to have a momentum breakout. So remember what each indicator is asking and answering. So what I'm asking of the market usually is there a trend? The squeeze is, and I think many of you have heard me talk about this before as well. When I met John, probably almost, let's see, my first book was in 2007. I probably met John in 2006, 2005. So it's been a minute, right? And he had these Kelter channels and Bollinger Bands on the screen. This was before the squeeze, as most of you know, it existed. And I thought, this guy decoded momentum breakouts. What John was able to do was figure out, in this game of musical chairs, that is a breakout. For those of you that like trading momentum breakouts, if you were to know when the music stops just a second before everybody else, and you can get your butt in a seat, that's what the squeeze does for momentum trading. I just don't momentum trade. So it's not a matter of whether I like it or not. It's just a matter of, am I asking, and do I need that question answered? And since I'm not really a momentum trader, it's not something that I usually incorporate. So that's really what it is. So do I ever incorporate it? Because it is our flagship indicator, at any given time, any of our members, Lorna Bot watches it. I have somebody with eyes on it. So if we are already in a trend, or if I'm looking for some momentum and someone says, hey, the squeeze just fired, awesome, right? Because now I've got more confirmation about the direction of my trade. All right. So I hope that makes sense? A lot of folks ask me about that, and we're all going to have a slightly different variation of tools because each one of us trades different time frames and different market conditions, right? So if we can always think about how do I get an improved view of this condition, a momentum breakout, squeeze, period. If I'm playing a trend, I'm going to look at market structure, multi-trend. I'm going to look at the wave. The wave is my regression to the mean. I'm going to look at the 21 propulsion, right? So different tools for different market environments and different jobs. Hope that makes sense. Thanks for the question. All right, what stocks am I watching today? What time frames am I looking at for day trading? That's a huge question, Jeff, but here's the bottom line. I am looking at a viable dip. I am looking for a minor low in those uptrends. The indices are in an uptrend. Many of the heavily weighted sectors are also in uptrends. And then for time frames, great question. Great question. So Jeff, when I'm day trading, it's a 5-minute time frame. It's a 5-minute time frame when I'm day trading, and when I'm swing trading overnight, preferably trend following, or if I have some sort of directional bias, it's going to be the daily time frame. And by the way, if I'm going to be building positions in my portfolio, longer term positions, something we also do in the Sector Secrets Mastery, we do day trading, we do swing trading, we also do position trades for the portfolio. That's going to be a weekly. So I have 3 time frames in my life, just 3. And I'm not scanning multiple time frames. A 5-minute, a daily, and a weekly. And boy, has life been so much easier when I know this is the time frame that I'm using for this particular type of trading. When I change the time frame, the brain goes click. All right, now we're swing trading. I go to weekly, again, click. Now I know I'm looking at position trades. So thanks for the question. Terrific. All right, Matthew, am I aware of that crypto bots are using my name in financial channels? Oh gosh. No, it's not me. Matthew, sadly, I was just befriended by, I think, John and Danielle yesterday, and neither one of them are their social media contacts. I was befriended by myself over the weekend twice. And again, none of them are ours. It is very difficult to get the official badge. Not that that means anything, because a lot of folks don't know that it's not me reaching out to them. We do our best here at Simpler to shut them off. But I will tell you, you cut off the head of one of these and 3 more appear. It's impossible to keep up. So what I always try to do is remind folks that not just me, anyone at Simpler, we are not going to solicit you to manage your money ever. All right. And number 2, Telegram, Instagram, any of the grams, TikTok, Facebook, Twitter, and anyone that is going to be invented or has already, we are never going to reach out to you and start saying, hey, how's your Bitcoin doing? 75,000. And not us. Yeah, we try to keep on top of it, but it is absolutely not us. Yeah, absolutely not us. It breaks my heart when I see folks getting scammed. It actually doesn't. I want to go just beat these people who are scamming my members to a pulp. As I like to say, I want to walk into the woods with them and come back alone. Yeah, when people scamming under the name of Simpler, yeah, I get punchy about it. So thank you for mentioning it here in Charts and Coffee. That way everybody knows. Gang, nobody here at Simpler is ever going to solicit your funds. No, we're not going to do it. That is not what we do. Okay. So thank you for mentioning that, Matthew. Hey there, Sachin. Looks like 6E wants to stay below parity. Yeah, maybe. Now remember, 6E, the euro, we're in the very, very early stages still of the European Central Bank going into their rate hikes. We're in the very, very early stages. Now, if the U.S. Central Bank seems to be more hawkish, that's going to be stronger for the U.S. dollar, and that's going to be bearish for the euro. The correlation between the dollar and the euro is usually a high 80s or 90s. They're very correlated and steadily so. But keep an eye on the U.S. dollar index. UUP, DX, the DX futures contract, or even the DXY, it is actually in a very fresh trend. It wasn't chopped for most of August, and we have a pretty distinct double top at about 109 on DX. This is what it looks like on UUP. I'm not ready to say it to anybody buy the dip, but as I said, the strongest days for the dollar are behind it. However, it doesn't mean we can't trickle up a little bit higher or chop a little bit higher. But the way that we saw the dollar rally through, say, February, March, April, and into May, that type of parabolic uptrend is not the cycle that we're in right now. But we could see a little bit more strength. I would just be very hesitant about playing currencies right now, as the different central banks are in different stages of their monetary policy shifts. Very difficult to trade currencies in these shifts. Okay. All right. With that being said, gang, it's off to the Sector Secrets Mastery. Gonna do a little day trading. Gonna do some swing trading. See what individual sectors and symbols are setting up for a buy the dip. How do we control risk in front of Jackson Hole? It's going to be a lot about position sizing and figuring out exactly where we're going to scale in. Thank you as always for being here for Charts and Coffee. Caffeinate and dominate, gang. Last week of August, tricky week of August with Jackson Hole. And then we can keep moving forward with, are we or are we not going to see another rate hike of a quarter point in February? Keep an eye on that month. That's probably in some ways an even more important month right now than December, because December seems to be set. I'll see y'all tomorrow. Same time, same station. Be good to each other.